Hi everybody, this is Lara with your end of the week video for the trading week ending Friday 21st of January 2022. Price is right at the lower edge of a channel that's been held since March 2020. If price breaks below that channel early next week, this analysis is going to switch to very bearish. That's the alternate wave count at time of publication. But if we see a strong bounce up Monday, Tuesday, then the main Elliott wave count will expect a fourth wave is just over and a fifth wave is in its very early stages. The target for the next wave up, if we see that bounce, is 4929. Elliott wave analysis first, classic analysis last. This is the new main Elliott wave count. It still sees cycle wave 4 over here and cycle wave 5 beginning. Cycle wave 5 with primary wave 1 incomplete, labelled intermediate 1, 2, 3, 4, 5. If this is the main wave count, then intermediate 1 looks extended. Intermediate 3, if it's over here, is also extended and it's longer than intermediate 1, and so now there's no limit to intermediate 5. But because both 1 and 3 look extended and only 1 or 2 of waves 1, 3 and 5 may extend, then if this is correct, intermediate 5 may be expected to be relatively short. Intermediate 4 may not move into wave 1 price territory below 3588.11. This channel is now drawn as a best fit, and it's drawn as conservatively as possible to contain as much of this movement as possible. I've drawn the first trend line from this high here, labelled intermediate 1, to this high up here. It's also nearly touched here, slightly fallen short here. I've pulled the lower edge down to sit on this low rather than this low here. When we pull it down to sit on this low, it almost perfectly shows where Friday's downward movement ended. If this channel is breached by downward movement at the daily chart level, then I may discard this wave count if that happens next week. Let's take a look at this at the daily chart level, where this high and this low for minor 3 and 4 is this point here and here. Here's minor wave 5 and now intermediate wave 4. If it's over here, it would subdivide as a zigzag, and it may end perfectly at support at the lower edge of that channel. I have 3 targets for intermediate 5 for you, and the first target may have a higher probability because remember, for this wave count I'd be expecting intermediate 5 to not be extended, so to be relatively short. At 4929 from this low here, intermediate 5 would reach 0.382, the length of intermediate 1. If price approaches this first target and the structure of intermediate 5 is incomplete, or price just keeps on rising, then attention turns to the second target at 5258. Intermediate 5 would reach 0.618, the length of intermediate 1. Again, if price reaches that target and the structure is incomplete or it just keeps going up, then the next target our attention turns to at 5792. Intermediate 5 would reach equality in length with intermediate 1. The lower edge of this channel is really important. If we see a full daily candlestick below and not touching this trend line, preferably by downward movement, not sideways, if we see that Monday or Tuesday, this may become an alternate or it may be discarded in favour of the very bearish wave count, which we'll get to next. At the weekly chart level, this is the alternate, it's very bearish. I've changed the way I've labelled primary wave 1 if it was over up here, and I've resolved some of the problems I had with the previous labelling. If primary 1 was over, then there's an extended intermediate 1, intermediate 2, extended intermediate 3, intermediate 4, and a very short intermediate 5. So intermediate 5 is short, 1 and 3 are extended. 3 is longer than 1, and I've resolved the subdivisions within 3 and within 5. If primary wave 1 was over there, then primary wave 2 may be in its very, very early days, may last several weeks to a few months, and would most likely correct to the 0.618 Fibonacci ratio of primary wave 1 at 3195.28. It could be deeper than that. Primary 2 would most likely subdivide as a zigzag. Primary 2 may not move beyond the start of primary 1 below 2191.86. The channel is drawn in the same way on all charts. At the daily chart level, here's the end of primary wave 1. If we see intermediate 3 and 4 over here, I've resolved the problem with the subdivisions of intermediate 5. If primary 1 is over there, then primary 2 may be underway, and within it, intermediate wave A would be incomplete, subdividing as an impulse, minor 1, 2, 3, 4, 5. Minor 3 nearly complete, and then a bounce for minor 4 may not move into minor wave 1 price territory. So if we see a new high above this point here early next week, then this alternate wave count would severely reduce in probability, could possibly be discarded, and the main wave count would increase in probability. For this wave count, we need to see more downward movement. We need to see this channel breached by a full daily candlestick below and not touching it before we can have confidence in this very bearish wave count. If that happens, then I would have confidence in this wave count. It would be the main wave count. That's the bottom line for this wave count for next week. If intermediate A subdivides as a 5, then finally when it arrives, intermediate B may not move beyond the start of A above 4818.62. Okay, classic analysis now. There is some support for that alternate Elliott wave count. At the weekly chart level, a strong downward week doesn't have push from volume at the weekly chart level. At this high here, we do have a bearish candlestick pattern, and there is divergence between price and RSI, but it's not enough. It's not long enough, and it's only single, and so it's not enough to support that more bearish alternate Elliott wave count, but it is enough to support the main Elliott wave count. The bearish engulfing candlestick pattern could support either Elliott wave count. We've got a new swing low below this prior short-term swing low here, suggesting the potential for a trend change from up to down that supports the alternate Elliott wave count this week. Look for next support along the way down at 4260. On balance volume gives us bearish signals supporting the alternate Elliott wave count. We've been over RSI. ADX is still too low, it's below 15, no indication of which wave count's correct there. Stochastics neutral. ATR increases as price falls as normal behaviour. Some strong downward movement this week. Bearish upper wick here, we got more downward movement. Again, a slightly bearish upper wick for Friday, and volume is pushing price lower. That supports the alternate Elliott wave count. A bearish signal from on-balance volume is very weak but does support the alternate Elliott wave count. ADX gives a very strong bearish signal supporting the alternate Elliott wave count. RSI is just reaching into oversold. I took some time today to go back again over the last, not the 2020 bear market, but the dot-com crash and the global financial crisis down to that low in March 2009. And I had a look at how deeply RSI can get into oversold territory and how long it can stay there. Just because it's dipping into just because RSI is dipping into oversold on Friday doesn't mean a low has to be in. It can reach a little bit more deeply. It can remain there for just a few days, but price can actually fall quite a considerable distance in that short space of time. For this particular market, its downward movements tend to end with a lot of strength. But this is an early warning to expect a bounce coming up, if not a trend change. Stochastics oversold in a trending market. We don't use stochastics, we use RSI. ATR showing an increase as price falls, normal behaviour for this market. The AD line has made a new mid-term low this week. Price has not made a corresponding low. Breadth is now falling faster than price. This supports the alternate Elliott wave count. However, at the last all-time high for price, there was only just over 2 months of bearish divergence between price and the AD line. In the last 100 years, there have only been 3 examples of fully fledged bear markets arriving after less than 3 months bearish divergence: 1946, 1976 and February 2020. If this happens again, it's only just 2 months, so it's less than 3 months. If it happens again now, it's the 4th time in 100 years. The odds of that are not particularly high. That supports the main Elliott wave count. But here now, we are starting to get a more bearish look on this chart, supporting the alternate Elliott wave count at the end of this week. At the daily chart level, we see that same bearish divergence, now quite strong mid-term bearish divergence, supporting the alternate Elliott wave count. Breadth is falling faster than price. There's weakness in this market. However, that is not confirmed from inverted VIX. Both inverted VIX and price have moved lower this week. Price has made a new short-term swing low, inverted VIX has not. Volatility is not rising as fast as price is falling. This divergence is bullish and supports the main Elliott wave count, and that's one reason why I'm still going to have those two wave counts going into next week, because if inverted VIX and the AD line had agreed with each other, I possibly would have been tempted to swap the wave counts over, but I'm not going to while inverted VIX and the AD line disagree. And here we see that bullish divergence again, and there's quite a cluster of bullish divergence developing here. Price and inverted VIX have both moved lower on Friday. Price has made a new low, but inverted VIX has not. Volatility is not rising as fast as price is falling. This divergence is bullish, adds to the bullish cluster of bullish divergence, and this supports the main Elliott wave count. Between VIX and VVIX there is no new divergence. The situation is increasingly bearish, but not wholly so. So we have to go into next week with those two Elliott wave counts, a close by confidence price point for the main Elliott wave count, and that trend line which differentiates the two, and price is right at it on Friday. We should know Monday, Tuesday, which of those wave counts is correct. That's all for me this week with your S&P analysis. I hope all our members are looking forward to a fabulous weekend.